Hey everybody, John King with Summit Funding. Thank you for joining me for my live broadcast today. I'm really looking forward to providing this information on a weekly basis as I have been doing for the last, I'm trying to have a version of myself that I can see of myself, and then I started hearing it. So anyway, sorry about the technical difficulty. So bottom line is I am providing this content every single Thursday at 12:15 to give you updates as you're thinking about buying a home, as you're in the home buying process, or know somebody that might be in that process, that I can help give you the education that you need to navigate those waters successfully. So I want to start today's show with talking about credit changes that are coming, and they're coming very, very soon. So this all stems back from multiple States Attorney Generals, filed lawsuits against the credit agencies back in 2015 for data that was inaccurate on credit reports. And it really came from the fact that these credit reports showed things like collections, judgments, tax liens that ultimately didn't belong to the borrower. And there was not personally identifiable information on those credit report data that would show they really belonged to the borrower. Maybe it belonged to a parent who had the same name, and you were the junior and they were the senior. Any number of different things have caused those types of misinformation. And so there's been a lot of back and forth, and there was a settlement that came as a result of that lawsuit, and it's rolling out in phases. One of those phases has to be implemented by June 8th. And that's what I'm referring to right now. And it's got some of the biggest changes to credit and how it's going to impact credit scores and credit reports. So first and foremost is new collections will not show up for 180 days after that collection was filed. So that's huge. Think about the situation where maybe you signed up for something. Maybe you signed up for a health club, and you had a dispute with that health club because they weren't giving you what you thought they were going to be giving you. And so you disputed with them and you canceled your service, but they said, nope, you can't cancel, and we're sending you to collections. I've had clients that have had that happen. And so the benefit with the new rule is you will be notified of the collection. You'll find out there's a collection there, and you'll have 6 months to work on it. Instead of the moment it becomes a collection, it immediately impacts your credit score. So new collections won't show up for 180 days. So people who have had collections that just happened, they'll have some time to resolve it before it will impact their credit score. That's really, really big change that will give us appropriate amount of time to fix something that we weren't aware of. So that's one of them. The second one, paid medical collections will be removed. Even more important is that if the insurance company is making payments on a medical collection, it will also be removed and or suppressed. So basically what's happening is that it won't count in the credit score. So if somebody has a medical collection that is showing up on the credit report now, after June 8th, if it's paid or if it's in the process of being paid, it's required by this new law to be suppressed from your credit score and or removed from the report completely. So that's going to be huge in helping improve credit scores as well. The next thing is collections not updated in the last 6 months don't count. So what happens is you've got a collection that was put on 3 or 4 years ago, and that collection agency places it on your credit reports, and then they don't continue trying to collect. They put it on there, and then they just kind of wait. And that continues to hurt your credit score. And so what the credit system is doing is they're basically saying, look, if they haven't updated it in 6 months, then it is a stale collection account. It is not going to count against your credit score after June the 8th. So again, another thing that if somebody has old collections and they're not updated in 6 months, then they have to remove from the credit report. So that's a big one. The converse to that, the challenge here is that we're going to have situations where our collection agencies are going to sell the collection from one agency to another. And so that does cause it to continue to re-update on your credit report. There's nothing that I've seen in these changes that will change that at all. But just be aware of the fact that if a collection is sold from one collection agency to another, they're reporting it more recently than 6 months, then it will show up on your credit report. But that new sale won't show up for at least 6 months because of the first rule I talked about, that they have to wait 6 months after a collection is placed before it shows up on your credit report. The next thing that's happening, and I really like this one, is they are removing collection accounts that did not arise from a contract to pay. So let's think about that. What's a contract to pay? So a contract to pay is really you saying, I agree to pay this person this amount of money for these services. So the scenario I gave you a minute ago about the gym. And you go to the gym and you say, I want to sign up for a year's worth of gym membership for X number of dollars a month. That's a contract to pay. You agreed and you signed a contract that said you were going to pay it. If you are in a situation where maybe you got a parking ticket, you didn't sign a contract saying I'm willing to pay this parking ticket. Now, some might say you signed your driver's license, but that's another story. But that's one of the examples they gave. Or maybe a library fine. Or here's a good one, a tow truck fee, where maybe you were parked in an area that was a no parking zone. And so you got not only a ticket, but you got towed, and now you've got towing and storage fees. So they can send you to collections. You have to pay it, but it is not going to count against your credit report because you did not sign a promise to pay back that money. So collections that arise from if you didn't have a contract to repay, they're not going to count those against your credit report effective after June the 8th. All right, next big one, tax liens are going away. So tax liens, if someone has owed money or does owe money to the IRS or to the state or to the county for tax liens, there's a lot of misinformation because the credit agencies get all of this data from private parties. There is no method for the credit agencies to go directly to each of the county agencies and find these liens that have been recorded. And so they pay private parties to go sit at the county courthouse and search the records and provide them this data. And there's a lot of inaccuracies and inability to validate the information that's being provided. And so it's just been changed, and the credit agencies are saying, look, we're just not going to count tax liens on the credit report anymore because we're being sued for accuracy of information and we can't be sure this information is accurate. So they're not counting tax liens on the credit report. The last big change is judgments. Most judgments have already gone off the credit report. This actually happened last July. So a judgment arises when you owed money, it was a collection account, you went to court and you lost. And the court orders that you have to pay back that money and it becomes a judgment. That's been a huge issue in my world of doing mortgages and a huge issue on the credit report in credit scores when you had a judgment against you. For the same reason we talked about with tax liens, the data just isn't accurate enough for the credit agencies to track appropriately. And so they are no longer including judgments, and they haven't included judgments since last summer. So for people who had a judgment and they didn't buy a home because that impacted their credit score, these changes are really helping you out and being able to qualify because you should likely have better credit. So that's the gist of it, guys. So I've covered a lot of information. Feel free to go back and watch this video. The bottom line is that the mortgage industry is evolving. I have a lot of different opinions right now about whether that's a good thing or not. We're definitely in a place where the industry has not lost a lot of money because housing prices have been going up. We've been doing very good underwriting. And so they're willing to take more risks. And this is one area where we're going to see credit scores go up for people when the underlying activity, you had collections, you had judgments, you had unpaid tax liens, didn't change. But the truth is that there's too many problems that have come up because of inaccurate information on the credit reports that have stopped good people from being able to buy homes. And so I like this change because it allows people who have had issues on their credit report that it's impossible sometimes to get these collections cleared up. And so these are now working towards your favor and helping you have better credit to be able to qualify to buy a home. So if you have any questions for me at all, please feel free to give me a call. I'm excited to help you out in answering these questions, and I appreciate you trusting me to guide you and give you advice. Like this video, share it, comment below. It really helps me out in promoting this information. So please comment and like it and share it with your friends, and I look forward to talking to you. In the meantime, have an amazing week, and we'll talk to you soon. Bye-bye.